Oh man, I am pissed. And there are a couple of reasons I'm pissed. Number one, I'm pissed because I'm supposed to be in East Salt Lake City right now, but unfortunately, because of unforeseen circumstances, I ain't there. But that's okay. I'm gonna make sure that what happened today does not recur, because that's what life is, right? Life is always 2 steps forward, 1 step back. And if you take a step back and you can learn from it and you can make revisions to prevent mistakes from happening in the future, fantastic. That's called life. That's called getting educated. That's called developing, whether it's in business, in communication, or as an individual, as an employee, or whatever. Your goal is to always try to get better, right? And to move forward. That's totally understandable. But what I'm more pissed about is that today is March 1st. Today is the first day that we're supposed to be getting better February data than what we had in January. Because remember, January was all about, it's seasonal adjustment month, right? Well, oopsie doopsies. We got some bad data today. It's a terrible day for there to be bad data because today we have an expiration of the courses in the flash sale. That's because today is Tesla Investor Day. And after all, the prices go up over time. So if you want to guarantee the best price going forward, make sure you join the programs today because we're raising the price tomorrow. Yeah, there'll be another probably sale at some point in the future. I don't know when, but the beauty is when you lock in your price now, you're guaranteeing lifetime access to the best price possible. And oftentimes prices can go up $50, $100, $200 over time. So you're very incentivized to lock in early. So check out that flash sale linked down below. Okay, look, the data today, big problems. So again, today we start getting February data. And what kind of data did we start getting? Well, we got data that wasn't good. It started with Europe, but then it also happened in the United States. And I can't wait to tell you about the United States data because it is an SH9T show. Like, I feel like I just got a Bloomberg terminal code that says SH9T all over again. Why does this 2023 already start sounding very darn similar to 2022? This is scary. This is not in line with my Nike swoosh recovery. Now, it still can be, but right now it's trending the other way, and I don't like that. But that doesn't mean I'm always right. I could be wrong, and this data is not fantastic. Now, it's too soon to flip-flop, but I'll tell you when it's flip-flop time. Actually, I'll give you a little bit of a guide at the end of this video. All right, so I need to continue on here. So first of all, look, okay, most of us here in America, we don't really care that much about Europe, okay? We know that prices are going up in Europe. We know that energy prices are up 19.1% year over year for energy. Prices up 21.8% for food. Okay, sucks for them. They got war next door to them. You know, they've got their problems. We got our problems, okay? But it's not just European data that's bad. It's not just Spance, oh my God. This just shows you how pissed I am. Spance. Good Lord. It's not just France and Spain who have bad surprises on inflationary data coming out. It was also Germany, which is the EU's largest economy, right? Germany coming out with what? Oh, Germany coming out with inflation that came in at 9.3% for the EU harmonized prices. That is up from 9.2% in January, and we were looking for 9%. We were looking for a slow continuation of the downtrend. All we asked for was to go from 9.2% to 9%. That's all we asked for on inflation. And what? Didn't even go down, went up. That's bad, okay? That's bad news. But this video isn't just about Europe. It's specifically about the numbers that came out this morning in the United States, which are a complete poop show as well. Before I mention that, though, it's worth mentioning that the European Union's like, yeah, we kind of have 3 waves of inflation here. The first is energy. The second is material inputs. And while energy prices probably won't keep rising, in fact, we've seen oil come down. That was like an obvious bet. We knew oil wasn't going to go to $100 a barrel. Then they are saying that, hey, look, material inputs are still expensive. And unfortunately, those costs are not ebbing. And now we're starting to see the impact of the wage increases show up in inflation reports. Now, we know here in America that it seems like the availability of labor is substantially increasing. We've kind of hit sort of a peak in terms of wage increases, but some of that is still showing up in this lagging form of data. Now, the Fed is somewhat trying to cast aside the noisy signals of some of these reports because they realize, maybe this time is different, or it's not, and we're just going to get Michael Burry screwed, or they're trying to, pay a little bit more attention to leading indicators rather than lagging indicators. But even when the lagging indicators are screaming at you, they risk unanchoring inflation expectations, which then F up the leading indicators. Long story short, bad news, okay? Bad news isn't good. I don't like talking about bad news. I like having bad news titles and talking about good news. That's what I like doing, okay? The title is crap and the video is good. If you haven't figured that out yet, I don't know where you've been, okay? It's just old news, okay? Well, what's not old news is that there's a flash sale expiring today. Have I already told you about that? Anyway, okay, the American data. Good Lord, what the hell? Seriously, what the hell? So, first of all, we get a stagflationary PMI report, which we covered during my course member live stream. Right after that course member live stream, I go to hop in my car, I bring all of our products and everything today, and I start heading to the airport, and then I got a U-turn, and here I am bitching. Anyway, so we get this stagflationary PMI report that, instead of coming in at a PMI this morning of basically a number over 50, which would be an expansionary sort of PMI report, right? What do we get? We get yet another report under even the last report, okay? The last report came in at 47.8, which is under 50. 50 above is considered expansion. Below is considered contraction. Last report was 47.8. We thought maybe we could match that. No, it came in weaker. But not only did the S&P PMI report come in weaker, but the ISM manufacturing report also came in weaker. We were expecting 48, which is already contractionary, and it came in even more contractionary at 47.7%. Now, on one hand, that's like, okay, well, like some contraction is good, right? Because maybe that'll put less pressure on prices, right? And that data is from February. It's away from January already, right? But wait a minute. What happened? Institute for Supply Chain Management, prices paid. Last report, 44.5. This report, 46.5 was the expectation. What actually happened? Holy crap, 51.3%. Okay, breathe for a moment and think about that. And if you don't get what I just said yet, I'm going to explain it in a different way. Okay, imagine this. You're going to pick up your phone and you're going to call 100 companies. You go, yo, is manufacturing up or is it down? And if, 49 of them go, it's down, and 51 say it's up, well, then the average is actually up, right? You tilt slightly up. So maybe you get a report that's like 50.5. If you call 100 companies and you're like, hey, what are prices doing? And 60 of them are like, oh, prices are improving. And 40 of them are like, prices are a little more expensive. Well, then you have a report of 60. Prices report, actually you'd have a report of 40, which would imply that prices are actually coming down more than they're coming up, right? That would be fantastic. So that's what you want. You want manufacturing to come in stronger, things to be better, and you want prices to come in down, better than expected. That would be better in both cases. What's the worst case scenario? Manufacturing down, less orders, and paying more money. That would be bad. In fact, that would be called stagflation. That would mean we're making less and producing less and selling less, and prices are going up. SH9T. Well, what was the report that we got today? Manufacturing below expectations. Prices paid way high. We haven't seen this kind of prices paid ISM report since September. Okay, we're already in March. That's like half a year ago. How wild is that? September was 6 months ago already. That's insane. And now all of a sudden, we have an inflationary impetus for February that's as high as it was 6 months ago. What's that going to mean for CPI going forward? Or should I just call it CPI at this point? I don't know. Actually, wait, I do know, because I have the CPI inflation expectations right here, and I'll read them off to you. But WTF? Of course, at the same, before I read you these inflation expectations, of course, right afterwards, then you get Kashkari coming out, doing his little media circus, doing the, I'm open to either 25 or 50. It's like, dude, listen, okay, Fed, y'all can talk tough. We get it. You're going to hike for longer at 25, and you're going to keep them there for longer. Does anybody actually think they're going to go to 50? Yeah, some people do. Are they going to go to 50? No way in hell, in my opinion. No chance we see a 50, because it would shoot themselves in the foot of credibility. The only way they'd go 50 is if we got a nasty inflationary report. But with the data we have right now, even with today's numbers, it's a 25. But we get a bad CPI report, which I'll read you the expectations in a moment. I'm not going to say no way in hell anymore. I'm going to start going, that's going to hurt. That's definitely going to hurt. Now, we know that the market is expected to be bumpy. And again, I want to read those CPI numbers in just a moment here. But I want to reiterate this. We know. So I have to calm down a little bit. And remember, in the V-shaped recovery. We never said it would be smooth. In fact, every single day now, I feel like I'm drawing this. Okay? So I feel like there is a chance that we're just hearing this, the noise, right? Like we're over here, we're hearing the noise. But that noise was supposed to be January. So like right now, like the noise that I drew here kind of implies like some comes down, some comes like some bad news, some good news. Right now it's like, okay, that was a lot of bad news for January. And now it's like, oh, how do you want to start your February data report? How about with some bad news on March 1st? Come on, man. It's like you timed the bad news on the flash sale expiration day where the prices are guaranteed to be up higher after the flash sale. It's almost like they timed it. Because now see what you're doing is you're really saying, take a purple line here and you get, okay, so we move up, maybe we move up to this, right? And then you leg down a little bit, but then rather than getting bad news, you get more bad news, and then you get worse bad news. It's like, where's the good news? I don't know, the data ain't showing it right now. This is walking right into the bear case. Now, sure, we're up from the bottom. We're knocking on the door of the 200-day moving average. Wouldn't be surprised if we start breaking some of these 200-day moving averages because, you know, some of this data is legitimately poopy-doopy-doopy. It's not great. Right now, we're literally on the NASDAQ sitting on the 200-day moving average. We are on the Fibonacci retracement line, the first one, our 23%-ish level here. We're sitting on it. This is a very critical point for the NASDAQ. The exact number is 289.6. We're basically at 290. So we're sitting on this, which is also where the 200-day moving average is, about 289.26. If we break this trend, we could be going right back to hell. That's not good. And all it's going to take is another bad set of data. You've got CPI coming out on March 14th. You've got jobs coming out on March 10th. And then we get reamed. Okay, then we take it in the margin on March 22nd when the Fed talks. So what are the expectations for CPI? Yeah, exactly. No, all right. So the prior release for the month-over-month data was 0.5%. The expectation for month-over-month is 0.4. Prior core month-over-month was 0.4. This one's expected to be 0.4. So basically, barely budging. Then on the headline, at least you have some kind of potential budge going from 6.4 to 5.9, and on core from 5.6 to 5.4. But what if we miss that? SH9T. Damn it. Flash sale. That's all I can say. Flash sale. We need to talk about this in the course member live stream because it's a problem. And then we're going to have to start looking at how we're going to set up or potentially hedge going into to some of these reports here. Because, you know, as much as I want to be bullish, it might be smart to look at some hedges, whether that's with cash or otherwise. So we'll talk about those. As always, every single trade alert I make is in the Stocks and Psychology of Money group. Everything I do with my portfolio goes in there. Course member live streams you get lifetime access to. If you join the course member, any of the courses, you get lifetime access to those courses on building your wealth with all the new content going into them and the live streams. Live streams are great for Q&A, us chatting together, thinking of ideas together. But also if, you get lifetime access to that as well. But also if you want to join the Elite Hustlers course, pretty common bundle right now. A lot of people actually recently have been getting the Zero to Millionaire Real Estate Investing course, Stocks and Psych, and the Elite Hustlers course, bundling all three of those together. Then you also get the Elite Hustlers live stream where we do Q&A just on building businesses and dealing with problems, like 2 steps forward, 1 step back. But that's what business is. You know, if there weren't problems in business, you probably wouldn't have a business. The whole purpose of a business is to solve people's problems, whether it's with goods or services. And the whole purpose of running an efficient operation is to make sure that you can minimize issues that are coming up. But when issues come up, you learn from them, you adjust, and you move on. You know, you can't cry over spilt milk. It is what it is. All right, thanks for watching. Good luck. This sucks.